We're talking about nothing down this week. A couple of things in the video. This fella, he had no ID, $100 cash. He bought 7 properties with no ID and no money. So it's mindset. This whole video, he says mindset, 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 mindset. I'm going to be talking about mindset a lot. And the key was he screened for motivated sellers. Before he went, he probably knew who the motivated sellers were, and then he called the motivated sellers on the payphone. You're kind of a baseball batter. If you're an investor, you're a baseball batter. If you're playing baseball, you only get 2 strikes and 3 balls. Then you have to swing on the 6th pitch. But in investing, you can let 100 pitches go by. On a 1 in 100 deal, that's awesome. You just kind of swing with all your might. You have to look for bargains. The best bargains are, Rothschild said, was when there's blood in the streets. That's when they buy. That's how he made his fortune. They buy it when there's blood in the streets. So you want to have motivated sellers. And then you have to have the right mindset. You've got to think big. When I first started, I bought these little tiny piddly deals, and like I said before, and you can't make any money with them, and they're a lot of trouble, and it's way better to buy big. But you'll have to make sure, if you get loans, you may have to make 100% sure you pay your loans. You want to maintain perfect credit. Pat, what's your credit right now? Do you know what your credit score is?
I don't know, 830, 840.
Okay, that's why you're getting unbelievable loans. Over 800 is awesome. So what you have to do is, I subscribe to a credit service where it checks if I'm late on a payment. It'll notify me right away, because that'll ding me 10, 20, 30 points if I let that go too long. The other thing is, he mentioned is mentoring. You need a mentor to help you navigate through all this stuff. What I do is I say, what's the secret of your success? And I had one fella, he said, buy at the corners of long roads, like interstates. Well, I did that, and it turned out fantastic. Once you get your money out, you're in it for nothing down. So that's how Henry did it. He did put a small investment in. When did you get all your money back out of that first investment?
Probably about 15, 20 years ago. The check's over $2 million. It's a major home run. No, we bought at 6,000 an acre, sold on the same day, it closed at 12,000 an acre. We spinned off all the side.
Yeah, we did a double closing on that one. I bought some land, and Henry was my partner on that. And then what happened is the school board wanted the land, so we did a double closing. So on the same day, we got all our money back on a 100-acre tract. But that's called a split, where you split the property. So when you subdivide, you get more money. And sometimes you can subdivide on the day of closing.
Can I just ask a quick question on that? Did you get it into and then reach out to prospective buyers and start the negotiation in escrow, and then get have authorization from the seller to
You don't
sign
need
contracts?
authorization from the seller.
Vince money.
Okay.
So what you do is,
because it's one.
okay, on the contract, you say the buyer is whatever your entity is. We do LLCs, and then or assigns, so you can assign that contract. So you don't even need a broker's license or a real estate license. If you say or assigns, you can flip it to somebody else, and you don't have to tell anybody when it says or assigns.
Okay,
so what
so
we did is that on the same day of closing, we closed part of the property to the Denton Independent School District, and we kept, paid for part of the other. It didn't pay for the whole amount, the other 80 acres, but
Our side for free.
what's that?
We sold at 12,000 an acre on the same day. We bought for 6,000 an acre.
Right, and then when you do a double closing like that, you've got way less closing costs. Saves you way less closing costs, because the title policy's fresh, everything's fresh.
Plus
How
we
did
kept the corner.
And the title company doesn't have to tell the seller, they can be confidential.
How did you determine that the school district was interested in that land?
They called me.
Oh, wow. Okay.
So what I was thinking, if you could get a Class A building, you could buy it and it's empty. If you can get a tenant from LA to come to Dallas, like a big company that could take up a 30-story building, if it's a Class A tenant, like a national credit tenant who always pays their bills, you can buy that building nothing down. And so you show that to the bank and they'll lend you all the money you want. Oh, there was a doctor in Washington, D.C. And what happened was this, he had a patient came in who was a contractor, and he said, what? He was, and they started talking, and he said, well, I'm looking, I don't know if he made an appointment to get money or not to syndicate the deal. But he said, I'm building government buildings, but I need investors, and I'm looking for investors. He said, I'll invest. And he was, what happened, if you've got a government lease, the bank will give you 100% because they know that the government will pay for 30 years. If you have a 30-year lease, they know the government's going to pay that. Okay, so you want to look for bargain. I say if it's 30% below market. If you've got an appraisal and you bought it 30% below appraisal, you can take that appraisal to the bank and put less down or no down in it. Foreclosures, you can get bargains at foreclosure, or like the RTC had a huge foreclosure, massive foreclosure on almost every property in Dallas. And so they just auctioned everything. I got stuff pennies on the dollar back then because there's massive inventory and there's only a limited number of buyers who could buy everything all at once. And the guys who swung for them, as hard as they could, put every penny in, they made a fortune. They made an absolute fortune. Oh, tenants in common. Okay, so say if Randy and I own some property together, like 50-50, and we get crossways, well, who wants to buy that property? Like it's not very liquid. He may never want to sell. If he's got 51%, he may never ever want to sell. So you've got to gamble with that. So if they kind of like start bumping heads, they might want to split. Same as in a divorce, like they're forced to sell by the judge. So that's a motivated seller. Let's see. Life remainder estates. Okay, I've got one situation where I was thinking offering this lady a life remainder estate. She doesn't want to sell a property. Paige owns it all around her. And I said, well, you don't have to sell it right now, but she looks like she's about 85. And I was saying, well, how about, I'll pay it to your heirs when you die, and I'll give you an option payment so much per year. She didn't want to do that, but she did do right of first refusal. So it's an option. That's a motivated seller. I was reading a book about this guy called Thorolson. He built 400 hotels. What happened, he was like a billionaire, but he was leveraged to the hilt in 2008, and the cycle crashed on him. And he couldn't sell any of his properties. He was, because they weren't worth anything. There's no money to buy them. So he was ready to go bankrupt. So he kind of sacrificed a lot of property to avoid going bankrupt. If he went bankrupt, you're finished. And since then, I think he's built 100 hotels. Oh, if someone dies, it's okay. This is what happened. This property, and I got around 2016. So that was the bottom of the crash. There was a death, and the family had to sell it, and they couldn't sell it. So I paid them a little bit more money, a little bit more than the appraisal even, but they gave me good terms. The interest rate was maybe 5% or 6%. They gave me 3%. And then I had really good terms. You try to get the terms as long as possible. If they want a balloon, they say, I don't want to go 30 years. I go for 30 years. I can want. Well, how about if we give you all your money in 15? Oh, I can't go 15. How about in 10 years? Okay, I can do that. But hey, I'll tell you what, if we're in a bad economy, I won't be able to pay it off. I won't be able to get a loan to pay it off. So what I'll do is I'll give you extra money, so much money per year to extend that balloon. Balloons are called bullet loans, okay? A 5-year balloon means everything's due after 5 years. Say it's amortized over 30 balloons in 5. So you want to be able to have rollovers on that balloon. A lot of times I'll pay off a balloon way earlier because I can sell the property. So did I tell you about the tax sale where I got 4 acres for $10?
No, you didn't tell us.
There was a tax sale. These folks, it was floodplain, right? It's useless. The person who owned it didn't pay their taxes. If there's any liens on it, the tax seal wipes it out. A lien is someone who loaned money on the property or a bank, but it wipes all that clean. So I raised my hand, $10. Nobody else was at the option. Like there were 4 people. Nobody would even bid $11 for 4 acres in Flower Mound. That's like a very nice area. It was all in the floodplain, right? But for $10, I bought it. What can you use a floodplain for?
Mitigation land for another site that perhaps?
Yeah, say if someone's developing beside you, you might say, hey, I want to put my retaining water on your property so I can have more square footage on my property. Or I can donate your floodplain as a park, okay? Or what happened for him, like this is like a very high class area. There's people that had horses. Why would a guy with horses want floodplain? He kept his horses on it. He had 10 acres of trails, okay? Also, a friend of mine bought a floodplain like 200 acres for nothing. And guess what they found on his land?
Gas.
Yeah, exactly. So he got pretty wealthy off of that. So this is how that fella screened for all these people. In the ads, he's looking motivated seller, must sell, price dropped. Do you know what an alligator is?
You got to keep feeding it.
Yeah, okay. So like land is kind of an alligator. So if you've got a pretty good income, you can, that's the only reason I could do it. Is I had
You had alligators, but then I guess you paid off a lot as some of the land got split or condemned for power lines or highways, right?
Yeah, or like I sold another property, I just paid off the loan.
Right.
So it's all free and clear now.
So what do you mean free and clear?
Oh, there's no loans on it.
Oh,
all the stuff in Page is 100% paid for. Older sellers, okay. So this is another thing where you can these people if they have an apartment complex, it's probably paid for if they've owned it for 20 years. They're tired of all the problems. They don't want to go through a rehab. It needs a rehab. It needs to be painted. The carpets need to be changed. And if it's a little bit run down, you're getting kind of nasty tenants. Ask them if they'll take a 20% subordinate 20% or 30%. Okay, subordination means they take a second lien position to a bank first lien. If you don't pay on the first lien, the seller has to come back in and take the property back to protect their interest. So if they don't mind doing that, I sold a property like that where I subordinated my interest. They gave me 50% cash and I subordinated the rest for 10%, 12% of the project.
Can that be used to get no money down as well, where you get a loan for, let's just simple numbers, 75%, have them subordinate 25% after escrow, immediately after escrow, kind of like the double close situation, and then
No, you don't.
Zero.
No, you just negotiate it with the bank up front. You don't want to double escrow. The other thing is the bankers are my friend, okay? Oh, and the other thing is when you write a contract, you always have a clause. This is subject to approval of my attorney. This is subject to approval of my wife. This is subject to the approval of my partner. So what that does is it means the seller is bound to sell to you, but you're not bound to buy it by that clause. So it's called a weasel clause. And I always put that in, but usually I close. But if you don't have that in there, you might find something bad or subject to approval of inspection report. And what happens on that inspection report, if you don't have that, you buy it if there's something seriously wrong with the property, you're stuck. So, and then when I get the inspection report, I say, oh, holy cow, look at all this stuff. We've got fix this up before closing. So we need a price reduction here. The other thing is, you've got the power to walk from the deal. You've got the ultimate power of negotiation. You can walk from the deal. And all these beach vendors would want to sell something. And so Andrew practiced negotiating on it. At the beginning, he says, "Oh, Dad, get me this." He'd grab me and, he'd get it. Andrew doing that, you're going to pay top price for that trinket. But anyways, I said, "Andrew, no, pretend you don't want it." Okay. And so he got really good at negotiating with them. And he got, "Look, I got this for 25 cents on the dollar." So he'd walk away and they grab him and say, "No, we'll give it cheaper. We'll give it cheaper." Oh, so practice. The thing is, if you go on vacation, practice with these vendors to see how low you can get where you can get money. Seller financing. So if someone has a lot of equity, that's why I like land. All these they own them free and clear. They've got a lot of equity. I'll say, "Well, will you sell it over 30 years with financing?" And they'll say, "Yeah." I say, "What are you going to do with the money?" "I'm going to put it in CDs." "Well, the CDs are this. I'll pay you 1% more." And okay, what happens if the bank goes broke? What happens to that CD? He says, "I don't know." "Well, if I stop paying, that's the best thing that could happen to you. I've been paying all this time. You get your land back." Oh, they like that. Okay, so so it's a win-win. They've got the strongest equity or collateral, their own land. They're familiar with it, and they'd love for you to pay for 5 years and then get it back. Okay, another thing, on a lot of deals, Randy will throw in the money, his commission. I say, "Randy, you want to get in on this?" And he said, "Yeah, sure." And so he gets like 2 to 7% if he gets on the deal. And then splits. Okay, so like a lot of times I'll split out an easement for a power line and pay for the whole property. A lot of times I'll split out an easement for a natural gas line. And they complain at the city, like every time there's a condemnation, they're always dealing with me. And then what happens, you have to hire the top condemnation attorney. It's worth millions of dollars to get the top condemnation attorney. Or investors. Okay, you can get money for investors. The way I got into land, I was talking to this guy in Canada, and I said, he was a medical consultant, and and I asked him, so he had 100 doctors that he's managing their office for, so they didn't mess around. This is something you might do, Andrew. Like you might get a bunch of dermatologists and run their offices for them. You get systems going. This is what I was thinking of doing, but I kind of moved into real estate. But what you can do is, like, if you've got 100 dermatologists and you're managing their businesses for them, they may want to invest in real estate instead of the stock market. And so if you have 100 dermatologists, like, they don't have to put up a penny. They just sign on the loan. So you got 100 investors that are doctors. And then if you ever need money, their signature is like gold. If you have investors, never, ever, ever lose money for your investors. Never piss off your investors. Okay, you can syndicate the deal. This is something, there's a guy who syndicates deals, Grant Cardone. He syndicates deals on YouTube. So these people give him money for 10 years, and he's bought $3 billion real estate in his name, I guess. I don't know, or his company's name. So I don't know. I would never do that. But was able to buy $3 billion of property. But what he does is he pays 20% down, and then he's got a 10-year loan. So by then the property's worth double anyways. The rule of 72s. Do you fellas know the rule of 72s? Okay. A rule of 72s. If the interest rate is 7%, or if you get interest at 7% on $100,000, how long does it take for that money to double? You divide 72 by 7, so you get around 10%. So if you have 10% interest, it doubles in 10 years. If you have 7% inflation, it halves in 10 years. See, now lease with option to buy. This is something you could do, Pat. Like if you want to buy a house, if someone okay, they say if their company moved them, Qualcomm moved them to their Los Angeles or New York or wherever, they moved one of their top executives to New York, they've got 2 house payments. So and if the company doesn't cover that, if someone's got 2 house payments, that's an alligator. Okay, so that's the motivated seller. So you might be able to get a lease with the option to buy. You might have to pay a little bit more than you had to wait for, for it to crash. It's probably going to take a couple of years to get down to the bottom of the crash and get really good interest rates. So that's one way you could do it. You can control it and then say, well, okay, at that time I'll buy it. Stuff I do. Okay. Now, if I'm dealing with someone who deals in land, I'll say, hey, okay, here, instead of a down payment, I'll give you this property that's worth 20%. Okay, I'll do a more, that's my collateral, so I don't have to give them 20%. So that's moving a mortgage. Another thing is I bought a seller's finance deal, okay, and from Ronnie. And what happened is this investor wanted to buy it, so at double what I paid for it. And so I called Ronnie up. I said, Ronnie, I'm going to be paying off this loan. And he said, well, shoot, I sure like that interest rate that was 2% or 3% higher than what the bank gave or what a CD was. So, well, I'll tell you what, I've got this other property. You're a farmer. It's way more collateral than your farm because it's on the interstate. And just let's move the mortgage over that property and you keep getting your interest. So I've been paying him like an interest-free loan forever. And it's such a good loan. I can make more than 6%. So like I don't pay it off.
Another strategy for that particular deal, could you also have, if for whatever reason you didn't have property, could have wrapped that loan and added the extra, like had the second. So first position is his loan, second position, you wrap it and then collect the delta for the new
now
buyer.
you can wrap loans. I don't think you can do that anymore with I don't know what the rules are in San Diego. But a wraps, yeah, you can wrap a underlying low loan, but I think they're all doing sale right now. As far as I know. But if you have a private loan, you can wrap a private loan. So right of first refusal, I've used that. Options, okay, you can have, if you're doing a rolling option, this is what I'm thinking of doing. We're developing like 195 acres. I'm thinking of going all around. There's a lot of landowners surrounding. I say, well, I'll tell you what, when we start, like I'd like to, give you an option for your property. I'm going to pay you a higher price than you can get right now. And I'll pay you so much per year for the right to buy that property for this price in the future. So options are very powerful. It's control without ownership, but you have to have an attorney to make sure. You're probably going to want to have a deed in escrow. A deed is the paper of ownership for the property. So you want to have that in escrow. Okay. This is what I bought an apartment complex when I first, I moved from a single family. I bought like a 300 unit apartment complex. And what I did was I closed on the 3rd. So what happens, I got a lot of rent from the tenants. Okay. So I got all the rent from the tenants they pay in advance. Okay. So the tenants pay in advance. So I got a month of rent payments. And then I got all their deposits. So that was my down payment. So I got that one, nothing down. And the seller financed it. It was seller financed. What happened right after that, everything crashed. Yeah, it was the worst crash ever. And I was lucky not I traded it for some some farmland, some timberland. And I was able to sell it and I didn't lose any money. So another thing you can do is say for part of the down payment, you can throw other stuff in that you've got. Say if you got an RV, you've got a big boat, maybe you've got a Rolex the guy likes, maybe you've got a free and clear Mercedes. You can throw that in for down payment. That's okay. Here's what this guy was talking about. It's like, this is mindset. What everyone has is they have these chains on the brain. You've got to unchain your brain. The chains come from repetitive training. Like, for example, for me, my parents got a Holocaust check. So I got a very severe poverty mindset. You have to eat all your food, you know, you have to save every penny. But saving is good, but it's just kind of, you're chained to think small. You're chained to think really small. So you have to realize that, and you have to reprogram your brain. And so we'll talk about unchaining your brain. But in his whole video, it was the same thing. I got this book, Think and Grow Rich. There's only one chapter that talks about money. 29 of the other chapters is of his 2 books. There's 30 chapters. The other 30s are this right here. Okay, leverage. Okay, do you know what leverage is? Carrie, have you ever used a crowbar?
All the time.
Okay, yeah, Carrie, like, but you can lift a car with a crowbar. Jack is leverage. Okay, but this guy, does anybody know who this guy is in the gown here that's lifting the world? There's a guy called Archimedes. And what he did, he says, give me a lever long enough and I'll lift the world. That's how leverage works. Okay, you get tremendous power with leverage. Here's a picture of a house. Okay, on one end of the lever, and my goal was to buy stuff, you know, say I want 0 risk. Okay, so I'm not co-signing anything. If I don't pay the loan, the worst thing, it doesn't mess my credit rating up. I just give it back to the seller. I give them a deed in lieu of foreclosure, and that's not recorded anywhere. And I only did that once, and the lady was pretty happy. It was a big crash, and I just, you know, I just gave it back to her, and she was really happy because I paid for 3 years or 2 years. Okay, so she didn't get hurt at all. She was actually happy to get it back. So I want 0 risk, 0 per month, and infinite return. So you can't always get that. I want it to be ELF, easy, lots of money, and fun. Have less risk if there's a potential to make a lot of money. Okay, an example, say if you buy $100,000 home, and when inflation was really, let's say 5 years later, but you know, with hyperinflation in a couple of years, it's easy to be 200,000. So you buy $100,000 home, and say a couple of years later, you sell for 200. Okay, so if you paid cash, you doubled your money. $1,000 down, you got 100x, 100 times your money. So you've got a 10,000% return. How much money do you get on a T-bill? Do you know how much money you get on a T-bill?
5.
Okay,
Ish.
what's better, 10,000% in 2 years or 10% in 2 years? 5% a year for 2 years on a T-bill.
Yeah.
It's way, okay, so leverage is very, very powerful. And if you buy for $100 down, it's a 100,000% return versus a 5% return from or 10% return in 2 years on a T-bill. Okay, and if you get 0 down, it's to infinity and beyond. So you try to buy stuff, no money down. Okay, for motivated sellers, if you see a sign like this in your neighborhood, you might call. You know what a bird dog is in real estate? Like if you're hunting here in Texas, if you're hunting, you want a bird dog. So when you shoot a bird, they can find it in the field. You don't want to be tramping around the field looking for a bird. And they don't have to be real estate agents. If anybody brings you a deal, make them really happy. You know, so they're kind of bird dogging for you. You know, which means they're looking for, if they see a good deal. I know a guy who made a fortune. He gave seminars, and there'd be 100 realtors in the seminar. His thing was, you know, it was pre-qualified everybody for deals. say, okay, does anybody have a big deal that's too big for them? And they can't get a listing, or you can't sell it, or you don't know how to develop it, or whatever. I'll give you a percentage. But what they did is they went through 100 sheets, and there was like maybe 3 sheets that were really good deals. But they had everything in a form, and they could find out if they're motivated, if they had how much equity they had in it. They had a lot of the criteria. So have someone else fill out that sheet, and they could screen. They could look at 100 pitches and pick the best one. And say if they picked out of 100, you pick 10. You like at 10, and maybe one of that 10 you pick one, which is a home run. You swing it. Here's if someone inherits something, a lot of times they just want to get rid of it, or if they're very wealthy, they have to sell it for taxes. Government steals 40% of your inheritance unless you plan it out. So that happened to one of the bankers here, and his family had to sell stuff pennies on the dollar during the recession. And divorces, they're really good. The other thing I like, land, it crashes hard and it bounces hard, way harder than income property. So if you can buy it on the bottom, it'll triple or quadruple on the bounce. Like seller financing, they like mailbox money. They spent their life, on that apartment complex. They want mailbox money. If someone's defaulting on their loans, they're really motivated to sell stuff, to pay their loans. This happens on a crash. And this is the guy that went to jail for not drilling the oil wells and spending all the money on nice ties. And here's a guy, here's the batter, he's swinging at the perfect pitch. That's the 1 in 100 pitch. Here's the real estate cycle. So we're probably right there. The best lesson I ever got was from this landman who's been selling land all his life. I said, hey, if you could summarize everything you've learned selling land, being a land broker, what would that be? If you can summarize it in one sentence. He says, leave some meat on the bone. So when there's euphoria, nobody wants to sell. If you don't leave any meat on the bone, you may be holding it on. Right now, we're kind of complacent. It kind of bounced a little bit here, bounced back up. Now, Carrie's got a house that she's selling, Well, it's free and clear, but if you have a loan on it, if she had a loan on it and it was an alligator, she'd start getting anxious after a couple of months. And then, it's crashing, and it's like half price. Anywhere in here is a good time to buy. What I do is I've got, on my Apple phone, I've got the stock market. Real estate kind of follows the stock market. The best deal I ever did, basically I had an option for about $10,000 for 3 years on that RTC deal. My CPA said, don't do it. Haven't you read the newspapers? Haven't you seen the TV? And then my office managers talked to me for an hour trying to talk me out of it. So anyways, I bought it because it was like, or $600,000, which was financed. I bought it for $100,000, and they loaned $10 million on it, and it had all the utilities on it. So I knew I couldn't lose. So right here, what's happening is when they start doing layoffs, people are going to want to sell their houses. They lose their job, or they get moved to another part of the country, and they've got an alligator they've got to sell. If they're in trouble with their business, they have to sell. If they can't refinance a bullet loan, they're very motivated to sell. Right now, all these builders are building these shopping centers, and Andrew knows Dr. Bain. He's a real estate professor. And what he does is he's buying all these things up for great bargains because he's selling land for cash. And then these guys are really motivated to sell because they have a construction loan. And right now, you can't refinance. They want 50% down. And they only have like maybe 20%. I want to save my credit. I don't care if I make a profit on this deal. So he's getting bargains on that. So you buy when there's blood in the street. It's kind of scary buying when it's bad. For example, in the stock market, I bought Exxon. This is during the pandemic, so nobody was driving. So it went down to 40. I said, shoot, it used to be, I remember when it was 120. So I bought, I think, $250,000 worth. And then it went down to 30. So holy, what happened? They were in the Dow Jones. Okay, I found this out later while I was crashing. So they dropped out of the Dow, and there's index funds. There's a Dow index fund. So if someone drops out of the Dow, they have to dump all that stock, and they had to buy Tesla at that. So that's why Tesla went up and Exxon went down. And I should have kept on buying. If the next time I'm going to just keep buying on the way down and overcome the fear, because I was down $100,000. Okay, so it's a wave. Okay, so then you have hope, then you have optimism, and then you get the thrill. Okay, wow, like this is party time. And then you have euphoria, like you're in heaven. Okay, that's one of the signs that it's going to end. When the smartest people in the room think it's never going to end. What starts the crash?
Looks like interest rates based on your chart.
So high interest. So low interest means super boom. You want to buy stuff, if you drop it on your toes, it hurts really bad. You want to buy gold, you want to buy silver, you want to buy physical assets. Just anything, a house, anything's better. So if you can have physical things, especially for the stock market, you want commodity stocks like metals. You want metals and food for commodities, and maybe real estate investment trusts. Real estate's really good in inflation because your debt will go away. When the interest rate drops, that's when you want to buy some stuff. You get as much safe debt as you can. The other thing is a key point, and I'll talk about this, is time management. You want to get a PhD on real estate when you're driving around. Okay, that's what I do. If I'm driving around, I'm listening to real estate. And in the morning, I've got a tape that goes on for where it does self-talk. You want to unchain your brain, basically. And I'll show you techniques for unchaining your brain on the next one. But that's huge because 99% of this is up here, is knowledge. Oh, and then I remember I went to this one seminar, and this guy said, okay, see this bush over here? You can buy a $100 million high rise with knowledge. You don't need any money. But anyways, next week is gonna be unchaining your brain. Okay, well, have a nice day, folks.